How to trade the Bollinger Band like a pro and make like $100 profit from one trade. Hi and welcome back to Trading Strategy Testing channel where we learn and test your trading strategies. Today we will learn how to use Bollinger Band, market structure and the fundamental trading strategies that we tested earlier on this channel, and show you how I personally analyze the market and place trades. All the steps will be done live so you could enjoy the experience and learn as much as you want. It will be great to learn from a full-time trader all the steps he applies from analyzing the market all the way to placing trades and closing them at profit hopefully. I personally wish I had such content when I started trading few years back. If you like this series, feel free to leave us a thumbs up which will encourage us making more similar videos. If this is your first time here, consider subscribing to the channel to enjoy every piece of content that we make to help beginners become full-time traders. Let's get started.
In today's video we will use a different approach to find a suitable pair to trade. In the last video where we made a trade using MACD, we used barchart.com, but today we will use a different option, but it will help us evaluate the strength of the currencies and choose the right pair. We can see that the Swiss francs is performing high unlike the Japanese yen and New Zealand dollar. Based on the strategy that we discussed in detail in our previous video, it's recommended to go long on a strong currency against a weak one, or sell a pair made of a low-performing currency against a strong one. So according to the strategy, we have got two pairs to consider, Swiss francs, NZD or Swiss francs JPY. Let's look at the news calendar. Are there any major events that could affect the market, and more specifically the two pairs we have in mind? The answer is to head towards forexfactory.com or any similar platform that provides the daily major events affecting Forex. Apparently there are some major events and news involving the NZD. I always advise traders to have a calendar that highlights the date of the main meetings that the regulation bodies and central bank conduct every month or quarter. As a trader, it's necessary to have all of these important factors in mind to be aware of the market conditions. We can see that the official cash rate came as expected, which is a positive indicator. On the other hand, the monetary policy statement was hawkish, which means that the regulator is positive about the currency in question. And this usually drives the value of the currency up, which is not aligned with the currency strength indicator. So we might be in a pullback phase, and the price will eventually bullish afterwards. So we should forget about the NZD for now. Regarding the Swiss francs and Japanese yen, there are no major news about the currency, so we can choose to trade this pair today. To double confirm our choice, we all know that the Swiss francs has a strong relation with the euro, and the Swiss franc tends to rise against the other currencies when the euro does. So let's check which currency has the strongest correlation with the Swiss francs Japanese yen pair we have chosen to trade today. We can see that the Swiss francs Japanese yen is in a strong correlation with the euro Japanese yen pair. We can understand that the bullish trend that the Swiss francs Japanese yen is experiencing is solid, as the euro currency strength index is pretty strong today. Based on that, we can say that we are in a high probability setup, and then we can move to the trading platform to place the buy order. Before that, you might be wondering what makes the Swiss francs currency this strong today. Well, based on the latest unemployment rate released last Monday, the country experienced a drop in the unemployment rate, which gives investors a positive sentiment towards the local currency. The price is currently on a spike phase, which means that we need to wait for a pullback in the shortest time frame possible. Before we proceed, kindly give this video a like to encourage us making more similar trading content. I personally like to take advantage of the instant pullbacks as they are the weakest and don't show a high probability for reversals. So let's look at the 5-minute chart. Looks like we need to consider the 1-minute chart instead, as the trend is extremely strong and there are less chances to develop a pullback. We have just reached the bottom of the Bollinger Band, which is a key level if we consider the market structure, so we will place a buy-stop trade above the bottom of the Bollinger Band, which will trigger as soon as the price bullishes. We will also put our stop loss below the key level represented by the yellow line and aim for a risk-to-reward ratio of 1.3. We have made a video recently comparing trading the same trades with and without stop loss. The experience is quite informative, so don't forget to have a look at the video afterwards. I always advise the new traders to use the buy and sell stop orders, as they are only triggered when the price gets to your desired level. Otherwise, your balance will remain safe. The price has just got to our buy stop level, and the order has been triggered. By the way, I am using the same demo account that we opened last time for the previous video, where we used the MACD trading strategy that we have tested 100 times earlier. Feel free to have a look at it, as it's one of my favorite trading strategies. Regarding the volume size I choose for this order, I would like to talk about it at the end of the video, as I want to share some important tips. By the way, we have received many comments from you guys asking about the part 2 of the so-called 100% win rate strategy that we have tested earlier on this channel. The second part of the video will be released soon, as we need to highlight different topics on that video, so stay tuned and subscribe to the channel so you will be informed as soon as the video is released. Let's fast forward the video to save time and to answer some of the questions we receive in the comment section. We received a question from our beloved subscribers about testing the volume-related indicators in a Forex context. Volume data is not that useful in Forex trading because the volume you see is brokerage specific. You only see the trading volume of the current broker, so you will not see the volume of the whole market, making the volume indicator quite useless. Another question was about the best way to calculate the volume size of the trade. It's a complicated question as it is related to the actual size of the account, the currency or instrument you wish to trade, as well as the risk-to-reward ratio in question. It's essential to stay away from the medium or low probability trades to avoid worrying much about losing your capital. Other than that, if you feel nervous about the trade, the reason is usually the fact that you are over-leveraging the position or you are not using a stop loss. So make sure to only enter the market with a strong setup. We will release a video soon about the best way to calculate the volume, so stay tuned. Kindly give this video a thumbs up if you are enjoying this type of content, and feel free to leave a comment with your question so we can answer it next time. The best way to boost your profit in Forex is by increasing your capital. The risk-to-reward ratio as well as the leverage of your position should always be stable. The bigger your account will get, the more flexible your trades will be. You will have the possibility to have a larger position which would lead to a higher profit potential. When we were testing the Bollinger Band earlier on this channel for 100 times, you might have noticed that sometime we tend to have 4 to 6 consecutive losses, this probably because we were testing a system and that relies on a limited market price analysis. But many traders face such situations when they are starting their trading journey, so even if you have a strong trading system, it's always important to maintain a healthy volume size so you could remain longer in the industry. You can notice that we have started to make some profit. You can choose to partially close the position and move the stop loss to the entry level in order to secure your profit. Well, I only do that when I am swing trading, but I believe that this setup is solid enough so we could hit the take profit level sometime soon. We have just hit the take profit finally. We have made a profit of $6.55 from this trade, which could have been much bigger if we used a larger position. But let's wait for the end of the video, so we will reveal what would happen if we didn't set a take profit level for this trade. One of the most common challenges that some traders have is the overconfidence to the extent of entering the market with huge positions. We could have made a profit of $130 if we entered this trade with one standard lot. But the choice of 5 micro lots was based on the size of the account we have and the level of risk we maintained, even though the setup was quite promising. But guess what? We checked the price the next day and this is what happened. You can notice that the price continued its upward movement. If we partially closed the position, we might have made an additional 56 pips, which represent around $24 extra profit, and if we entered the trade with one standard lot, the total profit we could have made is $495. Next time we will try to close the trade in another way, so you could have an idea about the strategy I follow sometimes to get as much profit as possible from the trade. Kindly give this video a thumbs up to help us grow this channel. Happy trading!